Hello, friends. Well, are you thinking that it's quite turbulent times? Yes, absolutely. With a lot of difficulties all across the world. Um, you're probably wondering, how do I go around spotting opportunities? How do I invest and investing trends in 2026? Well, we have an expert and well an old friend of mine, known for each other for quite a few years, uh, Arthur Gopak. He is the founder of Alpha Gamma, and he is a financial expert, entrepreneur, and also has got his hands with AGC Wealth Management. Welcome, Arthur.
Yes, Sachin, thanks for having me. Pleasure to be back.
Yep, good to speak again. And now you have a much wider profile. So tell us about the business that you do.
Certainly. So, some of you might know me as the founder of Alpha Gamma, which is a business portal for young professionals. So, this is a media company that my brother and myself we built, and right now we reach 4.5 million readers all across the world. We have more than 500 authors writing on our platform, including Grant Cardone, Nir Eyal, Betty Liu, and well, some other big names out there. So we also work, with universities, with corporations, with events across the globe when it comes down to scouting for talent or promoting certain activities to get more online visibility. And so essentially, we are a digital marketing agency with our own audience. So this is what Alpha Gamma has become over the years. And now my current focus lies on launching a hedge fund out of Luxembourg. And this is what AGC Wealth Management stands for. We basically came up with a strategy that is able to consistently deliver double-digit returns regardless of the market cycles. And now I really want to scale this model while using our own proprietary approach to working with data and then take advantage of the opportunities. Basically, we're
Wow.
building, the modern day like asset manager, the way how it should be done for today's uh, age, so to speak.
Fantastic. Well, that sounds exciting. Double-digit returns. Um, and before you dive into the specifics, I guess the opening question that I have is in the global economic uncertainty that we have right now. What key signals should investors, business leaders, should watch out to identify emerging opportunities?
hmm Yeah, well, that's a great question. I feel, well, before I really dive into that, I really want to mention that whenever I'm working in finance, there has never been a time that's not turbulent. There's always something going on in the financial markets. There's always uncertainty, but whenever there is uncertainty, there is always an opportunity. So the question is, and this is whenever I have conversations with investors, it's really about, okay, what is the kind of return that you're after? Because then, whenever you can agree on the type of return you're after, then you can start spotting the right opportunities, and then you kind of prioritize these opportunities based on your own tolerance to risk. I can already tell that. Once you have the return, then it's much easier. Like once you have the return in mind, it's much easier to come up with opportunities. I also must say that in financial, I also have the formal degree, right? So I have master's in finance, and I can tell that all the academic literature that's outdated, you can toss it in the bin because there is no playbook how to do things the way they are today. Like the world has never been like technologically connected the way it is today. The world
Yeah.
has never had so much capital around the way it is today. And it's really about it's really about finding those individuals, companies who are bold enough to execute their vision. So doesn't matter if it's startup investing or if it's investing in public companies. Like, the overall approach is the same. So you have to find good businesses worth investing. So the question is, of course, the size of the stakes that you're playing with.
Yeah. And
I personally like the public markets because of the liquidity, because how fast things move. Uh,
yeah.
and also, like, in the another reason why I think the books, the academic literature that studied finance, and like, it's no longer relevant because you can generate returns so fast, like it's just unprecedented.
Well,
To give you an example, and there is a company called SanDisk. You probably know, you've heard of this business before. So they're well known for producing, memory cards, like hardware related to memory storage.
yeah.
Did you know that they went public last February? So they went public, and so they went public at like the price was around $47 a share.
Yeah.
By November, they reached 320.
Oh
What
dear.
kind of a return? What kind of, and this is one of the many examples. Like, mm, so this is what I'm talking about. Finding the right opportunity and then investing there. So we had to leave like when it was already like about 42% like per year. Like, we had to leave the position, but I mean, because it's already like such an unprecedented level to generate that kind of return in like 6 months. Like, whoever tells you, typically, if you look at modern portfolio theory, if you look at what is conventional, they'll tell you to
Yeah.
aim for like 5 to 10%. 10% is already crazy, but who
Yeah.
gets excited by 10%? Like, who gets rich by just generating 10%? So if you were investing at a steady rate of 10% net fees, like, and assuming there are like all the tax paid, then you'll just double your capital in like 8 to 10 years.
Yeah.
And so if we're talking about like a compound interest, then it will be like around
Yeah.
like eight years or so. And so and this is not exciting. Like if you go to investors nowadays and you'll pitch them this idea, they'll tell, well, yeah, I can invest in my like ETF or whatever, like mutual fund. So you
Yeah.
have to be you have to be visionary as well. And I think the right now investors who, so again, I've spoken to different investors. Some are more conservative, some are more aggressive. For some, I've spoken to some whenever I presented the fund to them, they said, oh, like, generating 20%, 30% per year, that would be under utilization of my capital. So meaning that they're able to find consistent returns elsewhere. So so there is no like one playbook.
Technological,
That's Mhm.
is it the technological innovations one of the factors that you would keep an eye on as far as the opportunity spotting is concerned?
Mhm. For sure, I would say technology definitely facilitates it, but it doesn't replace the process. At the end of the day, the quality of investment decisions are made by the quality of data. So the way how you work with data, the way how you interpret the data yourself. Because if you show the same data set to two different persons, you can get like two different outcomes, like two different,
Yeah.
say, synthesizes.
So
Um,
sectors that you would like to
yes.
mention for 2026?
hmm Well, I think AI is still going to be the big theme. So it continues to be well, not just changing, but completely redefining sectors. I mean, look at EdTech, like look at education. So I can tell this by looking at our own like portfolio of clients, that universities are having some of the biggest shifts that they've ever had. So like the degrees nowadays, they're becoming questioned. So what's the point of, say, pursuing degree in business when, you could ask an AI agent to kind of do the same the same task. Yes, it will be like average, it will be like mediocre, but it will get the job done. So then it means that if you are so getting a degree nowadays, um, it's a prerequisite for someone who wants to go like higher level, but
Yeah,
fewer people would want to look at it that way. So mostly people want to look at it as a quick entrance to get a job. But only like fewer people would actually pursue it as a, like, yes, in order to identify how AI agents say operate, how well they do their jobs, there has to be a senior expert understanding how the process looks like.
yeah. One of your
And
surveys,
mhm,
one
mhm,
of your surveys say, as far as these innovations are concerned, and probably AI or any technology is concerned, applicable or applying that into three sectors for 2026: um, EdTech, MedTech, and FinTech. These are the
yes,
ones you are probably suggesting as
exactly.
the areas
Mhm.
to watch out for
Uh,
2026.
So the way I look at it is that the sectors that are going to be disrupted the most are the ones that will have the one that have the biggest like margin, so the biggest value add. So that's why I would look at these three sectors like edtech, fintech, and medtech. Now like in finance, like it took previously say 1 to 2 years to get a company ready for an IPO. Now you can get it done in 2 weeks
Wow,
because like that's like just incredible pace. Like you can
absolutely.
out like so many things are getting automated. Like some most of the redundancies they get rooted out. And I actually think it's a good thing. It's a good thing to be focused on creative tasks because finance is still creative. Like finding opportunities, it's creative work. Like actually, out of curiosity, you can put the data array in ChatGPT or any other AI tool out there and ask to predict the price. Just a fun little exercise, and so and see what it tells you. Uh, but uh, but then of course but jokes aside, you can definitely so the AI tools are great when it comes down to working with data, but then again, it will not replace the data. And I can even tell that so these tools are great at compiling materials, but you still like they do hallucinate, they do make mistakes, they sometimes miss important aspects that completely change the say the outcome, like or even then, like we're talking about like big themes. So like do you enjoy playing chess out of curiosity?
Yeah,
Yeah. So like yeah, so I also discovered like this new hobby, and I've since last year, and actually look, whenever I asked ChatGPT to actually, okay, so what kind of move should follow next, and it actually made really strange recommendations. And
yeah.
it suggested, oh, like go there, and I told the tool, hey, well, this will be made, and then, oh yeah, good, thanks for pointing this out. So you see, when we're talking about the environments like this, you have to be very careful. Like, so you can't just blindly trust whatever AI tools suggest. Sure, they're already like improving certain aspects of like in
Yeah,
all these three sectors, but they're not replacing finance experts. They're not replacing doctors. They're not replacing like academic researchers, professors.
yeah.
So it's more that
And
these are the tools that we will have to use, like regardless. And
abs-
I think that's actually quite. I think it's even dangerous to disregard these tools altogether.
yeah, I think we've been experiencing, and taking that example of playing chess, we've been
Hmm.
experiencing automation for a longer period of time. So we have been used to playing chess with the computer where it has got its own logic built in, right? However,
Hmm.
now the AI is bringing in the new dimension wherein it's kind of learning how you would like to play. And
Yes.
rather than
Mm-hmm.
its created algorithms and formulas, it'll also try and adopt your style of playing. So it would
Mm-hmm.
remember, you typically would like to start with, a horse,
Mm-hmm.
or a camel, and then it would know your style of playing, and
Mm-hmm.
probably that's a kind of different area, and where, as you rightly said, it is likely to make more mistakes than the automation, because automation is supposed to be, you know, just focus on winning. But I think
Yeah.
AI is more focused about chess playing experience. So it might fail, it might not beat you, but then it's going to be more, it's going to be a better experience playing with an AI, rather than the automated ones before. But anyway, I
Mm-hmm.
think we
Yes.
talked a lot about the technology, the innovations, and like bringing back to, the opportunities that we were talking about. It's great, but when it comes to finance and making decisions, we also want
Mm-hmm.
to evaluate the risk. So
Of course.
again, I'm referring to this turbulent times that we are facing.
Mm-hmm.
How do you balance the risk and the innovation that we're talking about? Because that chip that you just mentioned, right? And well, you don't know in traditional
Mm-hmm.
companies, year on year growth for last 5 years is, this much percent, and this is what they're
Mm-hmm.
forecasting. So although it is average growth, but you at least know, so there is a certainty and
Mm-hmm.
low risk. So when you're going for these innovative opportunities, how do you balance the risk?
Yeah. Yeah. Well, that's a big question. Like all investors, like answer this, and risk means different things to anyone. But to me, it's really not so much the uncertainty, but how you can handle the uncertainty. So let me put it this way: if there is, so yes, you can look at the past performance, but in today's world, some things that were unthinkable like
Yeah,
5 to 10 years now they're happening, like they're reality today. So basically you can't take the assumptions like what worked in the past like and apply that. Okay, so this is, we can use these assumptions in our forecasts like moving forward. I actually feel that we're personally, I feel we're at the time where there is this economic shift in power. So you can clearly see this, like moving from the west to the east. And basically, there are tensions around this because, well, because the West doesn't want this to happen, but the East, well, is like the East is clearly like moving because, well, and there are objective reasons why. One of them is because the production has moved to the East, and that was exactly like the concentration of production was exactly what made the West like the leader, like the technological leader, the thought leader. But now, since these things are changing, I feel that the East has more, like say, potential. At least it's clear where the East is going, but it's not clear where the West. I mean, to me, it's kind of clear, but it goes outside of the scope of our conversation today. But I think for the first time ever, where it's obvious that the West doesn't know where to go, while the East has a clear path. So, and I think this, like, so this is to me like an axiom now. So it's like a constant, and out of this constant, you have to start searching. Okay, where can I find new opportunities that kind of match, like the ones that are geopolitically safe? It will be relevant like all the time. And even if like something happens, how can I protect myself? Like, of course, there are like hedging instruments for this, like derivatives, like options, futures, depending on the type of an asset class. But it always comes down to first where you see the growth, or also in finance it's called where you see the source of alpha. So essentially there are two factors to look for. Like one is of course the macroeconomic geopolitical reality, but another one is how well you execute. Because at the end of the day, you as an investment manager, yes, you can see where the opportunity is, but if it's executed properly, then and the return becomes like embarrassingly low, then what's the point? So I feel that the two factors are here at play is the overall understanding like of the macroeconomic geopolitical realities, and of course I mean being financially literate, and reading books, it goes without saying, but also the execution part. And I see, like in the investment world, and this is where I see an edge for AGC Wealth Management, is in the execution part. I worked in the industry for quite some time, and I built two investment teams. And I see that the most of the asset managers, they were established in 80s, 90s, beginning of 2000s. So the world has changed so much that these organizations are just helpless. Yes, they're the leaders of today, but will they be the leaders of tomorrow? And you can actually look at the mortality rate of these firms, and you'll see how often these rankings change. So I think
Yeah.
and I feel that one of the reasons why this is the case is that these investment firms, asset managers, they have lots of legacy systems they can't like immediately drop. So and that's exactly where I see the opportunity for us right now.
Wow, fantastic. Well, um, we kind of coming to towards the end of our conversation. That's the time we have. Um, Last, but one of the most important questions is, well, you have 4.5 million audience of yours, and while the world is facing difficulty and this turbulent times, what is your message to your audience? And then, of course, whatever you share will be helpful to the other audience as well.
Hmm. Yeah, I would say as parting words, be visible. Like obscurity kills more businesses, more careers than anything else. Right now is the perfect time to have your own project, be bold, and really be noticeable, because this is exactly how opportunities would come your way, and that's exactly how Sachin and myself, like how we got to know each other. So especially now in the technologically connected world, that's your best bet.
Absolutely, absolutely. That's fantastic. Well, thank you for sharing those insights, and I'm sure the audience is going to love this conversation. So, Arthur, as always, thank you so much for your time. I really enjoyed our conversation.
Chin, thanks for having me. Take care. Bye.